Hello everyone, my name is Rainer and welcome to my weekly market analysis. So, this week things will run slightly different because of the fact that I intend to share with you my analysis from a macro perspective. As you guys know, I'm a trend follower and I basically trade all markets out there. So, I do derive my edge from understanding how the different markets, I would say, react with each other. So I do understand the correlation between markets. I see volatility in some markets, and I see how money is flowing into one market, out and into another market. So all this kind of like help me piece all the little puzzles together. And with that, I'd like to share this information with you and see if it does provide any benefit for you. So how I will run this week's analysis will be first looking at currency. Then we'll have a look at indices, followed by bonds, and lastly we end off with metals. So 4 category, and I look to cover about 2 products in each category. So the first thing we have a look at is currency. So let's go. So on the currency, this is the chart of let's have a look at the euro dollar, and we notice that the strength of the dollar in recent months was very strong. So this led to a sell-off in most of the currency that we look at, right? The majors like the euro dollar, pound dollar, Aussie, New Zealand. So we can see that for the euro dollar, it had a sell-off from the 139 level down towards the low of 124 area, which is here. So about I would say 1600 pip move. And you can see that price is forming lower highs and lower lows. So let me highlight it out for you. So we have lower highs here, 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 and lastly here. So price is still actually bearish if you ask me, and I would stop being bearish only if price managed to take out this swing high over here. So as long as this swing high here is intact, I'll maintain my bearish bias on the euro dollar. Okay, so next we'll look at the pound dollar. So the pound dollar daily, again, similar story as the euro dollar. We had the sell-off from a high of 172 over here to the lows of over here, which is about 159. So again, we can see similar price action structure on the pound dollar. We have lower highs and lower lows. And again, maintaining my bearish stance until this swing high over here gets taken out. So as you can see that across the board, the US dollar, the USD, is still bullish, right? So if you look at charts like the Aussie dollar as well, the New Zealand dollar, you can notice that similar price action structure that is actually setting up. And I am still bullish on the dollar, thus it makes me bearish on all these majors. So that's all I have to cover for the currency markets. And the next market we'll look at is, how about let's look at the indices, right? For those of you who trade stocks, the indices, my key take on this is that I'm actually still bullish on the Nasdaq, and I personally feel that this Nasdaq, alright, the Nasdaq indices is actually the most bullish one among all the different stock market indices out there. One reason how I can actually identify this relative strength on the Nasdaq is simply plotting a simple moving average. I like to use the 50. So if you notice, Nasdaq is the only index that has not breached below the 50 period EMA, right? Needless to say, it has not closed below the 50 EMA, and you notice on the weekly chart it's still forming higher highs and higher lows. So the uptrend for Nasdaq is very much intact. And if you recall last week, I said that we are looking to long somewhere should price retest this 50 EMA over here, and which we got triggered this week. So this is my take for the Nasdaq, and compare it with European index like the Euro Stocks. You can see on the weekly chart, the Euro Stocks isn't looking as bullish as the Nasdaq. If I plot in my 50 period moving average, you can see that it broke below the 50 period moving average a couple of weeks back over here. So if you are to be looking to long the indices, again, Nasdaq would be my choice. Another thing to note of is on this Euro Stocks, we have a support coming over here. So price just closed on support this week, and we'll watch how next week plays out. So again, number of choices to trade the indices, but Nasdaq would be the relatively stronger ones among all the indices. Thus, no surprise that I would rather long the Nasdaq compared to the other indexes out there. So this is what I have for the indices, and with that, let's move on to the bonds and see how the price action structure is looking up. So this is the US 10-year bond, and you can see that price seems to be ranging, and what happened this week is that we got a huge spike up, very huge spike up down here. So I currently recall what the fundamental news was that triggered this move, but my concern is that price to me is still in the range. Okay, until price could actually break and close above either the highs or the lows, we are still looking to play the range on the on the US Treasury. So if you don't trade it, that's fine. But just the background knowledge to know is that usually the indices and the bonds, they are negatively correlated, or I would say inversely correlated, right? So stocks, bonds, they are negatively correlated. So if stock goes up, bond tends to go down, right? The reason being is that when stock goes up, money is shifted from non-risky assets like the bonds into risky assets like stocks. And similarly, when stocks sell off, where will money go? Money will tend to go to safer havens like bonds, and thus bonds tend to go up. So thus, if you recall earlier when we look at the Nasdaq, we had a very bullish price action on the weekly chart like this. And if you look at the 10-year Treasury on this chart right now, price seems to have sold off here and ranging right now. So you can see the negatively correlation between the two, right? The Nasdaq and the US Treasury bond. And with that, let's have a look at the 10-year European bond. So this is the chart, and you notice that it's pretty different from the 10-year Treasury. It's actually very bullish if you ask me, right? Series of higher highs and higher lows. And if you recall earlier on the Euro stocks, the price action was, I would say, somewhere a strong rally followed by a strong ranging period and price closing at support. So, and you can see that what this tells us is that the money is actually being taken out of the European indices into safer havens like the European bonds, and thus you can see the bullish price action on the bonds. So we can conclude that the smart money or the big players are actually shifting money out of the indices in Europe towards bonds in Europe, right? So shifting, I would say, money out of the stock market in Europe towards the bonds in Europe. Yep, that's what I would like to put across. And if you are looking to long bonds, I would say the 10-year European bond is actually I would say a market to watch, because if you look at the daily chart and I were to plot in say 50 as well as a 20 period moving average, you notice that it has respected this value zone for quite a while now, right? Respected this value zone for quite a while now. So it's definitely opportunity to get long should price retrace back into this value zone. So that's all I have for the bonds. And last but not least, let's look at metals. So the two metals that I'll look to cover this week is actually gold and silver. So having a look at gold, we can see that gold and silver, they're actually positively correlated. The correlation is not 100%, but it's definitely pretty strong. I'll say in the range of 70 or 80%. Didn't really look up the correlation table, but I would assume it's somewhere in that region. So on this gold chart, we can see that price had a massive sell-off over here, and right now it seems to be consolidating with lower highs. Right, we have a lower high here, and lastly over here. And price is being supported by this support level, which comes in around, I would say, 1,200 or just slightly below. So from this price action structure of this chart, price seems to want to trade lower. So key level to watch will be over here, as well as this support over here. So among the metals, if I'm bearish on it, I wouldn't be wanting to short gold. I would rather short silver actually. Reason being is, have a look at this silver weekly chart. You see that price, again similar structure as gold, it had this sell off over here, then it formed lower highs as well in this consolidation. So we had lower highs over here, over here, over here, and however, a month ago or so, price broke out of its support level, and right now it's actually trading lower, around $17. So if you are looking for shorting opportunity, I would say go for silver compared to gold due to its relative weakness on silver. So again, you can look for price action setup. If you go to the daily chart, you plot in a 20 and 50 period moving average. Let me do just that. Right, the 20, 50 again. So you see, well, Again, we do not know if the value zone will hold up, but nonetheless, we can see that the price action structure of it, right, seems to be had a sell-off, a retracement, followed by another sell-off, a slight retracement, a sell-off, and right now it seems to be retracing as well. So chances are that price seems to want to head lower in the coming weeks. So we'll watch if that does happen. So that's my take on silver. So let's recap. So again, today we covered the currencies. Alright, so the currency again, my main take on it is that the US dollar, I'm still bullish on it until those key levels which I've highlighted are taken out. Secondly, on the indices, among all the indices, I mentioned that Nasdaq is actually the relatively stronger one. So if you're looking to long the indices, Nasdaq would be my choice. Thirdly, we look at bonds and we understand how money is actually flowing out of the European stock indices into European bonds. So if you're looking to long bonds, the Euro 10-year bond, is a relatively stronger product. So I'll rather go long on the European 10-year bond compared to the US counterpart. And last but not least, we look at metals. And we saw that how silver is actually relatively weaker than gold. So if you want to go short on the metals, I'll look to short the silver instead. So that's all I have for you guys this week. And since I'm actually doing this for the first time, I'm not sure how you guys would actually, I would say, appreciate or like this. So if you do find that this week's macro analysis is useful to you, is beneficial, you can actually like my video or leave me some comments so I know what I'm doing is right. So with that, I'll wish you good luck and good trading. I'll talk to you guys soon. Thank you.